We have our next conversation where we'll talk through Project Spark and Capital Connect with some amazing people. And we actually have a quick switch out here from Judith to Patrick, but I'll let Darryl come up and bring this all together and go ahead and introduce some of our next panelists.
Awesome. Thanks, Scooter. Appreciate that again.
Of course.
So I have the pleasure of introducing David Rissmiller, who's the Executive Director for JPMorgan Asset Management. And this panel again today will be on Project Spark and Capital Connect. Welcome, David.
Thanks very much, Darryl. And thank you, Scooter, for the introduction as well. And as Scooter mentioned, what we're here to talk about is some of those resources that are available. So there's a fair number of institutions out there that have a variety of programs available to underrepresented founders, underrepresented fund managers. And what we're here is to talk about two specifically within the JPMorgan ecosystem. So I support what we call Project Spark. Project Spark takes our balance sheet capital at JPMorgan and invests into third-party venture capital funds. The purpose of making those investments is to show that we are willing to perform that level of diligence to underwrite those managers. And then we allow those managers to use the JPMorgan name as they go out and continue to raise capital. Right? So the hope is that we are going to help the managers spark their capital raising as they continue to grow out and grow their platforms. The other aspect of Project Spark, continuing to bring the resources together of JPMorgan, is to navigate the ecosystem, which is complex for us to navigate internally, let alone someone on the outside. So what we look to do in terms of Project Spark is make connections for founders and for fund managers in order to have them access the broad ecosystem of JPMorgan. One of those resources that Patrick is here to talk about today is our Capital Connect platform. So in order to kind of facilitate that navigation, we have a distribution list called project_spark_communications at jpmorgan.com. And if you are listening to this, you want to reach out with questions, you can reach out to that distribution list and we'll do our best to make the connections and put you in touch with the right contact at JPMorgan. So I think with that, I'll turn it over to Patrick to walk through the Capital Connect platform.
Thanks, David, for the tee up, and thank you everyone for the time. Really excited to be here. Just by way of quick introduction, my name is Patrick Jones. I lead partnerships for JPMorgan Capital Connect. So I'll take you through what Capital Connect is just at a really high level. As David mentioned, a lot of the things that you heard today, hopefully this is something that can help bring something that maybe will be helpful to you that is a little bit tangible. So what is Capital Connect? I'll talk about the problem statement first that many of you already know. You spend a lot of time networking, you spend a lot of time trying to build that network with other companies, other founders, but also with investors. And you also spend a lot of time when you're going through the capital raising process of meeting more investors and actually going through kind of that, what is a pretty painful and challenging process. So what we've done with Capital Connect is essentially digitized access to JPMorgan's network and digitized access to financing that JPMorgan can help with. So there's 5 main modules of Capital Connect. The first is networking. So networking is really just within kind of outside of the context of doing a round of financing. Can we just help you get connected to some of the other folks within JPMorgan's network? So I'll kind of walk through a couple of the different things that the team. I have the pleasure of being able to present some pretty nice looking pages and some visuals from our application. But there's a lot of effort that's gone into this. We're really proud of what's come out in the last couple of weeks as we went and launched. But just starting with networking, really using data to help you connect with the people that would be most relevant to you. So looking at your industry, or actually, maybe it's even your geographic region, maybe it's the investors that you have relationships with, to help you find the right connections. And we can make those connections through warm introductions on the platform. The next is capital raising, as I mentioned. So again, this is a really difficult process, both from the standpoint of meeting potential investors, making sure you're meeting the right investors. So going back to that networking, finding investors who look at and invest in companies like you, right? So maybe you're looking for an investor who writes seed or Series A checks, or you're looking for a lead investor, right? You don't want to be talking to an investor who maybe doesn't tend to write lead checks. They wait for someone to come in and say, okay, we'll write, we'll fund the majority of this round, and then they come in and they fill the rest of the round. So helping you get connected with the right investors for your situation, and then helping you through kind of I'll call it the workflow, but the really difficult process. Like there are, I'm sure for anyone who's gone through this, you have spreadsheets tracking all the context that you have, spreadsheets tracking all the conversations. Is this an investor that I thought was interested? Is this one that I think I want to follow up with? When do I want to follow up? So we've built some tools in the platform to help you kind of get through that process a little bit easier. What you see up here is basically a mini CRM, customer relationship management tool, to help you track all of that. And then the next thing is round modeling. So can you actually start to look at, okay, this is the interest that I'm getting from these different investors. What would that actually look like at different valuations or different amounts of investment that I'm getting in? So again, just kind of tools to help simplify that deal management and execution process. The next piece is benchmarking. So benchmarking is taking real data and bringing that and putting that in front of you to help you make better and more educated decisions. So we've partnered with a company called Omni. Omni is a data vendor, and what they do is they have access through their network of VCs. They have access to actual underlying term sheets that were signed as part of these deals. So you can go in and you can say, okay, for a specific market, show me all the Series B deals in one specific industry, and what was the amount raised, kind of the distribution, across a percentile ranking. What was the amount raised as a percentage of the post money? What was the post money valuation? So what this lets you do as a founder is go in and say, okay, I got a term sheet from an investor. Is this market standard, or is this not market standard? And if you don't know that yourself, or you don't have the data, you have to call up a lawyer or someone who actually knows how all this works to figure out what market standard is. So again, just bringing some of that access and I guess democratizing access to some of that information that you otherwise wouldn't have. The next main pillar is cap tables. So I see it up on the, can everyone see the cap table screen? I'm not seeing it on my monitor, but I'm seeing it on the, yeah, okay, good. I'll hit this really quickly because I'm going to dive into this in a bit more detail after we get through these 5 pillars. But really a cap table is intended to be the ownership record for your company. It's super, super important to get right, especially as you grow and mature and you get more complicated share classes, or you just expand the number of employees you have employee stock ownership plans and things like that. So we acquired a company called Global Shares, and what we've done is we've built into Capital Connect all the different tools that you need to manage your cap table, all the things that I mentioned, tracking ownership percentages, allowing your employees to exercise their options online if they have them, just a number of different things, and really just getting you out of Excel, which can be challenging, can have multiple different versions, and getting something that's really the single source of truth in a single online portal. I'll go into that in a bit more detail in just a minute. The last pillar that I want to talk about is what we call ecosystem. And so this is access to JPMorgan's network of third-party providers. We recognize that we're not going to be, your law firm, we're not going to be your accounting firm. We can get you connected with a lot of those different places, different data vendors, different kind of technology and software providers to again make a warm introduction. And we've gone through and done some work on who do we think are the relevant providers that companies like you would end up using, kind of helping with some of that diligence that you would otherwise have to do. So I'm just going to switch gears just a little bit. And Scooter, maybe if we could stop the screen share just for a second, I'm going to pull one other thing up. I'm going to do a little bit of a deeper dive on cap tables. I think it's really important. It's something that we have spent a lot of time investing in and a lot of time talking about with our clients. The reason being, it can be a pitfall at the earlier stages. It can be a pitfall because it's actually tracking the ownership of your company, which is really, really, really important. So these are the 5 things I just walked through on Capital Connect. Again, just kind of diving into a cap table. So what is a cap table? I've said it a couple times, but it's the ownership record of your company. So think about on one axis, the list of every type of share class, right? So you have your founder shares, your investors, maybe your employee ownership plan, stock ownership plan. And then you have the actual individuals listed on that axis. On the other side, you have how many shares do they own, what percentage of your overall, the total company is that, and what is the valuation there. So in one single view, you can kind of look at that and you can say, what is the makeup of my company? How do I add up to 100%? How much do I as a founder own? But other things that are more also important, but not as intuitive, things like if I'm going to make a big decision to issue options, for example, who do I need to get approval from to do that? Who actually has to look at that and kind of click through in a way and say, yes, we've done that right, kind of having another pair of eyes on those things. It's really important decisions. That's really hard to get right do in Excel. So it also gets a lot harder, as I mentioned, as you become more mature. So getting in, kind of using software to do this early is really important. I'm not here to make a sales pitch, but we are giving this away for free to our clients because we think it's so important. It's not something that we want or think that we should be monetizing on. We think it's a really important tool to get right, really on in the process, really on early on in your growth journey. So I can hit on a couple of these things. Managing this in spreadsheets, not ideal. So giving you something that puts it in one single source of truth in a digital place. Version control can be a challenge. So again, kind of on that same line of thinking. Manually tracking some of these things. I'll talk about vesting in a minute, but think about performance criteria or things like, okay, you have these options, but when do they actually vest? Typically, you'll see 4-year vesting schedule with a 1-year cliff, right? Sounds complicated, but when you actually see it in practice, it's not super complicated, but it's really easy to not get right. And so how do you know how much of those shares have vested at what point, especially when you have employees coming in and leaving at different times? So again, it's a lot to keep track of. And so we've kind of given this tool out to help everyone with that. So I'm going to talk about, we can actually stop the screen share. I'm going to talk about a couple of different, call them pitfalls, but one of them is equity dilution. So when you're going out and you're starting your company and you're talking to investors, how do you know how much equity to give away? And how do you make sure that you haven't given too much away? Well, part of that is just good decision-making. Part of that is just having that single view on your entire company kind of cap table, the stack, and understanding, being able to model that out, right? So if I take this investment and I do it at this valuation, how does that dilute my own ownership as a founder? That's a calculation you'd have to do in Excel or ask someone. So we can help you do that. Actually tracking ownership when employees leave, also really important. Investing schedules, so things like, well, what happens if this employee leaves and they had stock options? Did those stock options just disappear, or do they go back into the stock option pool that can be issued to the rest of the employees? Again, sounds really tactical and really specific and really administrative, and that's what this is. I like talking about Capital Connect as a whole lot more than cap tables because it is boring, but it is really, really important. This is part of the reason we wanted to get this in front of everyone here today. I talked about vesting, and then I think the last thing I just want to hit on is employee options when they're coming in and when they're leaving. That can be, I've seen it before, and typically when we onboard someone onto the Global Shares, the cap table platform, if they have been working in Excel for a year or 2 years and they've had employees that have joined in that time or left, it gets really, really complicated, and they end up having to do a lot of work to get that right. So anyway, I can talk more with anyone, I think we'll probably be sharing contact info. But the other thing, Scooter, is yes, perfect. We have the email up there, so we can get connected to you through that if anyone is interested.
Awesome. Well, thanks, Patrick, for sharing on Capital Connect. I want to bring James in on the conversation here. James is the MP of Black Ops VC. James, welcome. Thanks for joining us.
Hello. Thanks for having me.
Just curious, I know you've been watching behind stage. Any thoughts initially on the Capital Connect program and how entrepreneurs should be trying to leverage that to double click on anything Patrick just shared?
Yeah. I mean, managing your cap table is definitely an imperative thing to have understanding of. It's not something that's like super sexy or people talk about all the time, but I think the effort is pretty unique, and I think people who deal in the public markets have a pretty good understanding of like ownership of company and market cap, things of that nature. So kind of bringing some of those people to bear to educate entrepreneurs and offer them access to something that is maybe a little bit more hands-on, I think, in terms of like understanding how I should use the software. I think it's great. There's a few options out there today to do this type of stuff. I'm not sure of the business model in terms of like how much it costs in comparison to a thing like a Carta, but I feel like Carta is primarily there to manage securities in that way versus Capital Connect, because it has multiple prongs to it. You can use it for that, but you can also use it when you go out to fundraise, and you can kind of have like different components to it. So yeah, man, I think it's a great opportunity, and they got good people behind it. It's not just a bunch of bankers. They hire people into from tech companies and things like that to come in and really build a real good solution. So
that's awesome. I want to give you the opportunity to just introduce yourself and share about your background and your working role right now.
Okay, sure. I'll fast forward a little bit. My background is entrepreneurship. I've been building companies online since '95, and kind of started off building something more e-commerce oriented. That's what it would have been called. I didn't know what it was called. It was just like a website I built and made money. But then, probably about 10 years into doing stuff in the automotive industry, I was building cars for Fast and the Furious and things of that nature in LA. And when the recession hit around 07, 08, the automotive industry was not looking as enticing. And so it was a kind of I was called a third life crisis of, I love cars, I love what I'm doing, is this what I'm going to do the rest of my life? And I realized that I'm really passionate about building companies and building things. So cars happen to be the thing I'm passionate with, combined with building things. So what happened was a good friend of mine, his roommate from college, came to town, and he was building what has become a unicorn company, and he educated me on Silicon Valley. He was in Y Combinator early, all these things, and so I wanted to gravitate towards that, and so I instantly built my first tech company around then, entertainment media space, and that my first company, I got to be all the things that typically will happen. Most people don't get the trivector, or I don't know what you call it, the polygon vector, or whatever it is, but you have to be the not great CEO with the wrong co-founder. You hire the wrong people to do the work. You might have crazy angel investors, all these things that can go wrong. We do have a product that works, and that got us in this program called NUMI around 2010, 11. And NUMI was a house in Silicon Valley with people like me who were building companies from across the country. And that was pretty game-changing. So that's how I got Network Gaps closed, Knowledge Gaps closed. The backers of that program were everybody from Ben Horowitz to Mitch Kapor. And I got IP acquisition offer for that first company, moved on to build my next company. And in doing group flicks at the time, a la carte TV service, I came to realize there was an issue, because I built the product, I got the team together that was amazing, the MIT and Stanford team checking the box. Thousands of people signed up at 8 days with credit cards, and the investors told me, if you get content contracts, it's a chicken egg issue, then we'll give you the money. I went and got the contracts, and no money showed up, and that's when I realized that there was a dearth of capital in the market for people who were like me. And so I did two things. I pivoted to create Transparent Collective, a nonprofit that is one of the most performative pipelines for people of color to gain access to resources to grow their tech companies. And then I also pivoted to create Pilotly, which is Wall Street Journal calls the data engine at the heart of Hollywood today. In going through that journey, and Pilot continued to be underfunded while servicing, the Fortune 100 of the world who create content. We came to a realization. A friend of mine who was in Transparent Collective, he also had a company that was leading the art industry called Arternal, and he was getting a little bit more funding than me. He's a little bit further along in terms of his timeline of getting into the tech space. So he was able to benefit from Transparent Collective in ways that I wasn't able to. And so he raised a little bit of money, but still underfunded. And so he came to me and said, why are people like us not getting the capital we need to scale rapidly? We should do something about that. This was 2020. We had built a Black Founders list, realized there's only 330 Black founders who had ever been venture funded. And that was a stretch, right? Because you're talking about 250K, 100K, stuff like that. And we said, no, we should do that. We got our heads together, stayed up 2 days straight, literally, to build the first deck to start sharing some ideas with people. And from there, it took off. What started as Outliers Ventures, which is a name that's already in use, ended up as Black Operator Ventures, a much more apt name, which we call Black Ops. So that's kind of the background. It's the first seed fund built by Black founders, specifically, exclusively investing in Black founders.
That's awesome. That's awesome, James. And I'm going to invite David and Patrick back to the stage to just have a conversation. And the first one, I guess, question that I want to really throw out to the group is, what are some major mistakes that entrepreneurs have made when approaching you or just in general VC? And, are these mistakes in their deck? Is it, in the initial outreach? And maybe what is some advice to these entrepreneurs to, help them be, more impactful with their outreach?
Yeah, I'll tap in real quick. I'll speak from the context of my time, doing Black Ops. We get people who reach out every day, right? We have a form on our website where they can fill things out. We're obviously on LinkedIn, things of that nature. The idea of cold outreach has become more popular for people not having like the most robust networks, giving people some access. But I think there's something to the idea of being able to get an introduction to someone, because it's the same thing if you're selling a product. Like, you're not going to be able to like necessarily cold outreach directly to your customer in some enterprise cases, or you have to be able to strategically get to things that you want to get to. So I think it shows a little something when you're able to get that intro. But even if you're not able to, I think people have to be legitimately diligent about who they're communicating with and what they want them to take away. Meaning, like, you get a lot of outreach that clearly is not thoughtful. They're sending you a deck, they're answering your questions, but there's not a lot of depth in those answers, right? And so I think in creating an investment process, which a lot of people don't do, a lot of people are just trying to reach out to a bunch of investors, which isn't the process. In creating a process, you'll know exactly who you're reaching out to and what things you might want to say to them to pique their interest, to get them to have that conversation. So that's the one thing. And this is a random thing that I didn't know people did, but I want to guess email addresses. Like, if the email address is in public, don't send emails to it. Like, don't try and do that. Like, just go to the website, hit the form, follow the process, right? And people don't really follow the process because when they do it, they oftentimes feel like they've given up something and received nothing back. So I understand that positioning. At Black Ops, like, we are trying to build a system to allow everybody to get something back. But yeah, ultimately, I think you have to put in the diligence to capture someone's attention, that you want to work with them, and that there might be an opportunity for you to mutually benefit. So I think that's the first thing I say. And the only thing I'll say without kind of taking up the air in the room, this is a storytelling activity, right? So if you're trying to talk about what you're building, how big it's going to be in the future, all these things, you got to lean into the story. How big is it going to be? Why is it going to be so big? Why are you necessarily the person to do it? Those are kind of the most important things at the earliest stage. Everything else kind of is a supporting structure for that. But if you're not sitting in a house of huge opportunity with the person who has the keys to the house, then there's not much to really talk about. We definitely need people who are in great markets, who we think are talented. We haven't talked about what the big story is, and we try and help them do that, but it doesn't always land. So I think telling the big story, making sure you're being diligent about your communications is just 2 small steps.
Okay.
And just to add a bit onto what James said, from the fund manager perspective, which is where I focus, one of the points that resonates the least with us when we're hearing the pitches from the various fund managers is that when they walk through, they highlight that they have the best network, they have the best top of funnel going down into how they're going to make those investments. And then we ask for, okay, that's great. You walked us through the story, but then give us specific examples. And then we've been on a variety of presentations where they either haven't prepared that level of detail or they can't dig into those examples to kind of give that meaningful value add. Where, as James says, right, like you have to make sure you have those highlights of what we should take away. Because as we go through, we process this high level of volume kind of with the variety of managers that we're seeing, we really want to try to pull out as best as possible those points that are going to resonate well, that showcase their value add. And to just to give a quick story, when we first met with James for our Project Spark initiative, one of the most impressive things was how James walked through how he had that operator experience, he had the Transparency Collective, the networking experience, and then he was able to, one of our first questions was, you've just walked through a lot, how do you intend to divide your time in order to actually cover all of this? And he was fully prepared, pulled up a spreadsheet with 30, 40 line items in there that showed every single thing of how James planned out his day, how he's going to support everything, how he's going to divide his time. That level resonated so well with us to showcase he was prepared, he had thought through all of this, and it was a great presentation from James.
Maybe I'll just add one quick thing to it. I think it's putting yourselves in the shoes of the person on the other side, right? So in the James and David situation there, so James, you clearly spent some time anticipating the questions. Maybe you said, okay, if I'm David sitting on the other side of the table, what are the things that I'm going to be thinking of? What are the questions that I'm going to ask? What are the areas that I'm going to be concerned about? And coming in with the answers to that in a very structured and clear way. I think that is impressive when I see that. The one other thing that I just wanted to touch on is we talked about storytelling. I think the why is the most important part of the story. It's not necessarily what you're building, how you're building it, who you're building it with. I mean, to some extent, those things are important, but starting with why, what is the problem that you're trying to solve and how big is that problem? And does it matter, right? Because you can have the best product in the world, but if you're not solving the right problem with it, then you're not going to go anywhere that quickly. So I think always thinking about the why is another important thing.
It's awesome. So I know networking is part of the Capital Connect piece, and I wanted to ask, how does one cultivate a relationship with investors before asking for money?
Yeah, I think it's really important. I mean, probably 12 to 18 months, you should be thinking about out from your raise is probably the right time to be thinking about that, to be growing your network, to be doing it. I mean, look, I'm here to speak about Capital Connect, but I'm conscious of the fact that I'm not here to make the kind of sales pitch. Really, you guys are going to be talking to your own network of other founders, of investors where you have them. So make those connections and do it in a meaningful way. Understanding why you're reaching out to them and not that cold outreach. We do a lot of work and partnerships within JPMorgan with fintechs, and I will say maybe it's just my personal thing, but if someone's reached out to me in a cold email and it's actually not, oftentimes it's not relevant at all to what I do, and what I do is actually pretty clear on LinkedIn and things like that. So it makes me question, did I just get a blast email that got sent out to dozens of people? So don't be that person. We do try to help with a lot of that by taking in your preferences and understanding what it is that you're looking for, and helping with the algorithms that we've built to try to make those connections that are going to be the most meaningful to you. We have found in the kind of the old-fashioned way with our bankers would get in there and they would say, hey, I think we've got a great investor that you should meet. We found a lot more success actually with the technology that we built in terms of likelihood of those investors taking a meeting, which was a really good for us, a really positive sign that, hey, I think we're onto something here.
And just to mention again, right, if you have questions about how to navigate the JPMorgan bureaucracy, because we have a lot of programs, there's a lot to do. Maybe just show that email address again, where if you send it there, we'll do our best to deal with the volume and kind of make that connection to the appropriate team within the broader organization.
Yeah. In terms of reaching out, I mean, one kind of seems like simple idea, but one tip really is you're trying to get to know somebody. So, so a couple things. One thing that Mike Sable told me a long time ago, he runs YC or whatever now, was like, you're not going to get money in the first meeting, right? So I think a lot of people, like, if you ask them that, they'd be like, I might not, but like the way they're operating is as if they're going to get money within the first interaction with this person. And that just like changes the way you have a conversation. So, knowing that you're going to have likely at least 3 touch points with this person before you're actually going to get maybe some sort of commitment, changes the way in which you have a conversation, right? It's going to change how much information you put out at first. It's going to change how you ask for the follow-up. It's going to make you understand that there's a process, right? There's not just a conversation. So I think that's the first part. And the next part is when you are reaching out to people you don't have a network, the best way to do it, if you're really big on social, people pull it off on Twitter all the time. I have no idea how to do that. I guess I'm too old for that. But LinkedIn, though, is perfect. And when you reach out on LinkedIn, again, it's about, like Patrick said, having context for what does this person exactly do? And it's like the best way to do is ask them what they do. Like, hey, I see you do this and you have expertise in this. I'm doing this. It seems like this is the line. Would you be willing to give me some feedback on this thing that I'm doing? Right? And that's it. Be like, yeah, I could probably find 20 minutes to do that. There's like a 25% chance. The person will be like, yeah, I can find some time to talk about that. Talk with them about it. And then be like, anybody else who'd be interested in this? Right? You might know from their mutual connections, they probably do know someone interested. And then it kind of carries from there. But, you have to kind of build a network by asking people to put out their expertise, right? If someone became an expert in something, that means they want to tell someone else about it.
It's an awesome answer. Thanks, James and the team. So just to transition, I'm curious, how do you all go about figuring out when the opportune time to fundraise is? And, or I guess, how would one know when the opportune time to fundraise is and how much they should be looking to raise?
On my end, like when I think about fundraising, when you're at the earliest stages, it's just about like what's your runway. Like I think it's just more basic. It's around like how many human beings do you need to achieve your next milestone. You kind of like extrapolate that out. Whatever you extrapolate out, maybe you want to pad that with about 50 to 100% more money, because whatever you're building towards might be wrong. You might have to reconfigure and try again. But you want to try and get yourself like 18 months runway, like maybe 12 months if you can't get 18. But it's kind of based on that. And then of course, like, does it make sense to go try and raise $610,000? No, like you're sounding crazy, right? Like you might as well just. It's weird, but you have to round these numbers, like. So, and the reality is like, it's counterintuitive. And I've heard it a million times as a founder. It sounds weird, but it is no more challenging to raise $1 million and $2 million. So either you run a proper process or you don't, and you define the use of proceeds or you don't do that well. And like, because once you have $1 million committed in a concise amount of time through a good process, there's no reason there shouldn't be more people interested, unless you just got lucky getting that initial money. So you, as a diverse founder, you want to kind of lean away from the fact that I don't think I can raise that much money, so I'm going to raise 1 million. It's going to be easier for me to do that, because there is a thing of like, we're 25% committed or 50% committed, and obviously when you have a larger number, it's hard to make this, say those things. But if I'm raising $1 million, right? I'm like, okay, this is where I want to be. I really want 2, but I'm going to get 1. The reality is like, why don't you just go out and say you're going to raise like 1.2, 1.5, not all the way to 2, but far enough such that, once you start making that progress, you can say, we've opened up more. We want to go to 2 million. Like you can kind of push a little further once you got some commitments. But overall, overarchingly, you're just trying to figure out like, how do I get this runway? And, how much the company are willing to give up at this time. And like, that's the combination of things.
From the fund manager perspective on the venture capital side, the way that we like to think about it is if you're going to target your fundraise, right, and you're going to target 50 million or 25 million, whatever the amount is. It's what James says, we like take that number and then increase by 50 to 100%, because we always want to see the manager prepared, that they have thought through their portfolio construction, that if they're targeting 50 million and they get there, great. Here's the number of companies that they'll go to. Here's their intention to lead rounds. Here's their intention for ownership. But then they can slide that portfolio construction model based on the total assets that they end up raising. So if they target 50 and they only get to 25, we don't view that in kind of a negative situation. We view that as that they're prepared and they've thought through kind of how they're going to approach portfolio construction in a dynamic manner. And then when it comes time to coming back to market for their next vintage, the expectation, I think, is most of the venture capital funds have a 2 to 3 year investment period. So we don't want to see you have good traction with fund 1, and then a year later, as soon as that capital raising period ends, you're right back into market with the next vintage. We want to make sure that you've kind of thought through, you do the effort in the capital raising, then you do the effort for the investing for that 2 to 3 year period before you're jumping right back into market in order to raise that next vintage.
Just, I guess switching back to from the founder perspective, we talked about 12 to 18 months of runway. The first step, though, is understanding what is your runway, and that to me is having a really firm grasp of your business and what it looks like today and what you want it to look like in the future and what it's going to take to get there. So it is a little bit more of the kind of the technical, maybe the financial aspect or the operations, or what is it actually going to take you to get there? Because if you have the wrong number on what your monthly burn is, then it doesn't matter how many months of capital you think you have.
Awesome. So what if you're not comfortable with fundraising? I guess what is your advice to the audience here as far as what they can do, how they can get the help, resources out there?
Can you qualify what you mean by not comfortable?
Yeah, it could be anywhere from they don't have the track record. So it might be that. It might be that they just don't feel like they have the network. But I guess I'm trying to lump up a lot of things as not being comfortable, but maybe it's more so just they maybe lack the confidence and they might not have, it's an ambitious goal that they have, and they're at, ground zero with that goal.
Yeah, I mean, I'm gonna give you what we call I'm just gonna give you Black Ops feedback, which is I guess purported to be the realist in the game, as we call it. If you can't do that, you can't run a company. Like that's just a fact. So like if you don't have the confidence level to come in a room and talk about what you do, to ask someone to partner with you, I'm not convinced you can go in a room and sell your product, or you can convince consumers to use it. If you don't got the network, that's fine. Like everybody's got to start from somewhere. I'm running a venture fund right now, and I studied with the best people who did this. I read 2 books, but I had not been a venture capitalist, right? So while there was like learning along the way of how to have these conversations with LPs, what my strategy should look like, and things of the nature, where I'm at now versus 3 years ago is a different realm. So it's just a matter of time. You have to like make a concerted effort as to what your end goal is, and then try and pull in as much positive information as possible that you can filter through to like position yourself for the best outcome. So in the current moment, while you might not be in that position, you have to imagine yourself in that position and then work towards it. And don't do anything crazy. Like don't go to like the investor of your dreams as like your first at pitch, you know what I mean? Or, you know, first, whatever. First, I don't watch baseball, but you know what I'm saying. You know, don't go do that. Like, find people to talk to, get comfortable, get your reps in. It's like anything. It's like saying, I'm not confident to get out there and play basketball. It's the same thing. You're going to go out to a court by yourself, shoot some balls, and so you can get it in the net, or you're not. You're just not going to play basketball. So I think it's all analogous. Like, people who become like, what you're trying to do here, if you're building a venture backable company, ultimately your goal is to build a unicorn. Like, that's just the game, right? There's the game of building a company that's worth $50, $200 million, and that game is respectable as well. You know, we try and make sure all of our companies have a soft landing, which makes everybody, you know, makes them rich regardless. But like, the game is to try to get the unicorn, right? And anybody who's trying to be at that level, you know, puts in their hours. You know, there's no, I feel like people, because it's so, the information is so accessible, you know, you're reading it so much. There's so many accelerators now, there's all these things. People feel like I could be that person too. And the reality is, most people can't. So like, you got to determine if you're going to build a small business, if you're going to try and go big. And if you're going to go big, there can be no limitations to what you're willing to do or what you can't do. So like, that's why I would say, like, if you're not confident, get the confidence, like, meditate, whatever you got to do, talk to yourself in the mirror in the morning, tell yourself you're the best. Like, that's all real, right? Like, and then ultimately, you have to understand that some people actually are blocked because they think they're like begging someone for money. Like, in their head, because they want money to execute something, they believe like there's a mentality of like, I'm like, hey, I can really use this money. Like, that's not the positioning. Like, you're building something that is such a large opportunity that you are missing out on this if you do not come do this with me, or you're not. And so like, if you're not in a position where you're mentally like set such that you're like, I'm building this with or without you, I think it would be great to do it with you, and this is why. If you're not in that position, then it's gonna be hard to have the conversation, because a lot of people who are raising money are not asking for money. They're telling you about what they do, and they're like, hey, I think we're aligned. I think we're aligned too. Tell me more about this. Okay, happy to tell you about that. Okay, let me get you this information. No problem. You know, let's go have a drink. Like, it is a relationship development thing, like Patrick's saying. So like, this isn't about begging for money. So I think some people like fall into that bucket. But if it's a matter of, you know, confidence or network or whatever, like, that's something you have to develop. Otherwise, you can't be successful at what we're doing.
Just to add on from James, I think it's a lot like parenting advice. So I've got twin 8-year-old girls. And when I first started telling people that, you know, I was having twin girls, constant feedback was like, you need to do it this way. No, you need to do it this way. You need to do it this way. And I feel like with parenting advice, the purpose, you get to a point where you realize that just take it all in, and whatever works for you is going to, you know, be what works for you. So don't try to do someone else's presentation skills. Don't try to take an approach of, even when we go through kind of our Project Spark initiative, we have a set agenda saying, we want you to walk through this. And some of the best presentations that we have, they use that as a guide, but they're not trying to strictly follow that. Because at the end of the day, I think the best thing that I could say, at least, is to, however you authentically bring yourself into that situation, stick with that. Don't try to do something else. And that, I think, will help give you that confidence.
Yeah, I gotta kind of double down on what David's saying to a certain degree. I think, one, while we're not in the ideal state of living as of yet here in the United States, we are in a better state than we were 10 years ago, 20 years ago, or 30 years ago, right? It's like constant progress. So I feel like more than ever, if you look like me, you have the responsibility to show up in the room as your authentic self in the current moment. And I think there's enough people out there that are interested in that, or will be compelled by that, as opposed to repelled by that in current time, that you're doing yourself a disservice if you don't. And you're creating a level of uncomfort and friction for yourself that's making it harder for you to get across the line with something that's already difficult. You also have to realize the person you're speaking with, it's a long-term relationship, right? So you're going to know them for maybe ever, but like, you know, you're going to be working with this person for like 5 to 10 years, right? So, or more. And so you can't not bring yourself to the table, because it's ultimately going to be a downfall. when you actually start working with them if that actually converts.
Yeah, I mean, it really is. When you're taking money from an investor, it is a marriage in some ways, right? You are going to look to them for advice, and they're going to have expectations also. So you want to make sure that there is alignment there, but also just that that relationship kind of feels right, just from a even just a personal standpoint. Just the one other thing I'll say is, when thinking about getting comfortable, for me, there's two parts to it. One is your strategy, and two is how you actually kind of execute. And I'm talking about specifically on the fundraising process. So learn everything that you can around how does this process work? Who's successful? Who's not successful? Why? What are the things that I have to think about? Maybe I shouldn't go. I think James said it earlier. Don't go to my dream investor first. Get some reps. Go to your tier 3, tier 2, and get your pitch, really buttoned up before you go to that tier 1 investor. But then execution, prepared, right? In that actual meeting, you've got to know your business inside and out. And it's game day for you, right? When you get into that situation.
Yeah. Yeah. You gotta be comfortable. Like, you gotta be comfortable with how big your business is going to be, right? Like, you might build something and you might realize like, it's only going to make like $30 million. Now, $30 million to you is amazing. $3 million to the VC is like, that's limiting, right? If that's the maximum amount of money we can make, I don't know if we're gonna make it. We shouldn't do that. Like, so try and tell a story best you can. I know you gotta get money wherever you have to. So like, you might know you're pitching a business is not $1 billion, but you convince someone, more power to you. But like, I think in reality, like, again, like, I'll just put it back into the analogies, like, get your reps up, like, you would never be like, I don't play basketball. Let me go see if I can get a scrimmage with LeBron. That would be stupid. That would be crazy, right? Like, you wouldn't do it. And like, equivalently, like, if you think about the number of people that's able to build a real venture scale business, like, you got to think about how many people, and again, Mike's good with these things. He says, how many people get in the NBA? How many people get in the NFL? Right? Like, how many people get into these spots that you like revere and you think they're the best in the world? He's like, there's many less people who build unicorn companies, right? Like, let's frame this in reality, right? So know what you're walking into, what you're trying to do. You're probably going to fail the first time, and it requires you to try again to reach that type of level of success. It's just knowing where you're at, and it's okay if like that's not the game you want to play, but then you got to focus on the people who give up money for things that are not that, because real venture capital is not doing what's not that. Like, real venture capital is going after the $1 billion opportunity.
No, that's awesome. And now I want to transition a little bit to, how do you figure out a fund or an investor's thesis when it's not apparent, to just figure out whether or not there's alignment there before you even do that initial outreach? How would you go about approaching that?
I would say websites, but I know better than that because my website doesn't have my information on it. I'm going to fix that soon. So some people's got landing pages, whatever it is. But, I hit their LinkedIn. These people usually got blogs. You can definitely go to Crunchbase and see what they've invested in and make your own assumptions around that. You gotta be a little careful there, because I would say, like, remember, 75% of VCs aren't even good at their job. So you got to focus on like the top 25%, right? And then the top decile. So like, you're going to find people who've invested in things just because someone else did it, like not really following their own thesis. The thesis was just like a fun thing to throw out there when they were raising money, but they're not actually doing it. So you can look at the investments, but try and look for the real trends. If you see one thing that's like you, and you see like a 10 other things, you got to know that one thing was edge case, and like, that's not you. They probably knew someone's sister who knew someone's dad who got them money, right? Like, that's not for you. So like, that's the first step. And then the next step is like, so that's if you can't get to the conversation. If you're already getting the conversation, but you're not sure, you do that same research, but when you're talking to the VC, you got to have your questions. Like, make sure like you're talking to people about, first is what's the last investment you made you were excited about, right? And if that person is like, oh, I remember the last investment I made was last year, you're not a real investor. So just know that out the bat. Like, this person's just making like one bet a year or something, then what are we talking about? That's not real. So first thing is like qualifying, is this person actually an investor, right? If you don't know. then the second thing is, what are you most excited about now? What trends are you really looking at? And then if the person doesn't respond with what you do, then you can follow up with, how are you feeling about the vertical SaaS market right now? And like get that. And if they're like, well, I've only seen a couple things there, I'm not really into it. Like, all right, cool. Well, that's where I'm focused. Like, I'm happy to keep talking, but we can both save time here. Like, don't be afraid to walk away from a conversation. Don't have a conversation, unless you just try and get a rep in. But even then, the rep's not going to be that good because the person might be just genuinely disinterested, and then they're not going to like give you good feedback or good reactions while you're talking. So that's what I would say. You gotta be prepared to not only read up on it, but then re-verify it when you talk to them. Maybe the website's out of date. Maybe they're feeling something else because last week they saw something else pop in the market. Like, you really want to know that. So, and it makes you look educated as a founder.
We've seen examples as well where they were kind of pitching a sustainable climate venture capital fund. We asked them why, because it didn't really seem to mesh with any part of their background. And their response was, they just thought they could make a lot of money in that strategy right now, which, very honest response, but it didn't really seem like there was good alignment there for how they were going to kind of add value for the portfolio companies.
Yeah, we think about this a lot on Capital Connect in terms of how do we try to find those criteria to find the best matches. And really, I think it is drilling down into that portfolio of investments that they've made. It's one of the best ways to do that. Look at their history, but that's not always perfect. But ask those tough questions. It really is. I think, James, you mentioned it earlier, which I liked. It's not I'm begging for money. It's I'm actually verifying you also, right? It's like if you go and you go to a job interview, you're actually making sure that you're going to be successful if you do get that job, and that you're going to actually like working there, and that's the right fit for you. So be I would say inquisitive in those meetings and make sure it really is that. It really is a good fit.
Awesome. I'm going to transition now to get a little bit more tactical, and I'm just curious here. During the process, is it better for me as the one trying to get the opportunity to provide a term sheet, or should that be from the investor in your standpoint?
Term sheet definitely comes from the investor. That's the for the people that we invest in, that's the most elusive thing. That's the primary purpose of the existence of Black Ops, is to lead seed rounds such that there is a term sheet to follow. I think as a Black founder, I've definitely found myself having to create terms just to rally angel investors around it and stuff. So I think you have to do that. But ideally, once you reach the seed stage, you find like a real institutional investment partner who is willing to set those terms and get behind it and be a frame of reference for everybody else. So I guess at the earlier stages, a founder has to go to YC's website, read about a safe, what they should put in it, have some conversations, read a blog, whatever. But once you get to the seed stage, you should hopefully be getting people who want to put that on the table in front of you. And once you do get one, be open to going to find some other people to see if they're interested in doing that as well and seeing what the best deal is for you. Not just like financially, but like human wise, because like the difference between a $10 million valuation and $12 million pre-money or whatever, it's kind of doesn't really matter. Like if one person is better, then you go with the better person. It doesn't matter if you give up more to the company, because you're gonna give up more to the company later anyways. So you can either have to do it sooner or do it later, which you can all just balance out, man.
And James, just to follow up on that, what are some of the most common terms that you've seen?
Like in terms of just the deals, I would say I normally look at like Wilson Sonsini and stuff for this type of thing, because they do all the deals. So they do like these quarterly reports on like what is the average valuation in each stage. Stages are starting to like merge a little bit right now. Like people might have raised $15 million in Series A, and they're like raising another Series A plus and stuff like that. Like that's all kind of new. But I would say like at the pre-seed, people are doing these pre-money, or you can do pre-money or a post-money cap on a safe these days. But they're kind of doing like these pre-money situations around $4 to $8 million. Some people are going a little crazy, like 10 or 12 million, somewhere around there. And at the seed, usually it's around 6 to 20, depending on how solid the seed. And it kind of goes up from there, which is all going to be based on like your company's metrics. And, if it's consumer, like what are the metrics, the engagement, the active users. If it's more software, enterprise, whatever oriented, it's going to be more related to that revenue, that recurring revenue, and the customer cohorts. So from there, valuation starts to become a little bit more shaped on reality. Like before that, it's just based on level of interest and what people think the opportunity is.
It's awesome. I'm looking at the time here. I know we have about 3 minutes left. So I want to thank the panelists again for their time and just see if everyone maybe has some parting thoughts. And if you can keep these thoughts in maybe about a minute so we can have everyone get a chance to go, that would be great. And just start with Patrick as far as.
Yeah, no, I just wanted to say thank you for the opportunity to speak in front of all you. This was great. I learned a good bit from our panelists also here. So, I think that this is a particularly challenging time right now. Just the state of this market. So, leverage your network, leverage those resources, and leverage us, leverage JPMorgan if there are things that we can help with. We are happy to step in where we can.
I can piggyback off of that. So as Patrick said, it's a challenging market, but some of the reporting that I've seen is very excited about the private market. And if you look at past kind of volatility, there's lots of exciting opportunity that follows periods of volatility that we've kind of seen over these last few weeks. So I think we're definitely excited. As Patrick said, use that email, leverage us as best. We'll respond to all the inquiries as quickly as we can. And thank you to Darryl and James and to Kevin as well for including us in today's presentation.
Cool. I guess I get to wrap it up. Yeah, thanks for having me. If there's one takeaway, I guess for a fund or for a founder, I would say understand that everybody has a job here. I think there's like this figmental thing for some people who are raising capital to think that they're talking to like a multi-billionaire who's giving them money. And it's like, no, this principal, this partner, this other person, like they work here, they work at this fund and this is their job to return money. Like understand this person's job and their outcome and what's going to elevate them, especially if you're not talking to the general partner. What elevates them in the conversation, what makes them look good. It's no different than, it's all a sales process. It's no different than selling to an enterprise customer. So for a founder, like you're talking to someone whose job it is to deploy this capital, they're not doing you a favor by giving you money. Once they decide to give you money, like don't think that you have to take the money because they're going to try and do everything in the power to deploy because they've already made the mental decision. They've already emotionally committed to doing that. So now you are able to determine who you want to work with. You don't have to be worried about the money going anywhere. And from a fund standpoint, it took me a while to realize, I don't know why, that I'm playing the same game again. People's job again is to deploy money. They are a family office who they have to, manage this money and help people generate more wealth. They are working at, a financial institution that uses a bunch of people's money, puts it together, puts it to work, gets the returns, makes their profit, and then holds the money for the people. Like whatever it is, like their job is to make sure that there's a return and find the right people they want to work with. So not forgetting that this is a game of great relationship and ensuring that you are giving people the comfort level they need to make a decision and take a risk with you, to work with you over time, to deliver returns to their constituents. So just know that everybody has a job here. And once we both determine that we want to work together, it's very hard to break that bond because there's very few people that people determine to work with. So that's my takeaway. Everybody has a job here. Don't think there's any charity or like giveaways going on here. Like once people decide they want to win, they want to win. They want to do it with you.
That's awesome. Well, James, Patrick, David, thank you so much for joining us on this Saturday. I really appreciate it. And I'm going to pass it back to Scooter.
Thanks.
What's going on? Thank you so much, Darryl. Thank you so much to Patrick, to David, and to James. Great conversation, really authentic and real. So I appreciate all of you for really breaking through the fluff and getting a little tactical and shaping the mindset, right, for us in the audience to understand whether we want to go the entrepreneurial route or raising a fund. What does that need to look like? What's our mindset need to be as we engage in that process?